Welcome to a special edition of the Darden Admissions Podcast. I'm your host, Brett Twitty, and you are listening to a new episode. On this episode of the podcast, I'm excited to share the latest installment from our ongoing Faculty Spotlight series, a series we call Office Hours, with a conversation with Ian Appel. Ian is an associate professor in the finance area here at the Darden School of Business. And in this wide-ranging conversation, we talk with Ian about his background, what led him to Darden, what he enjoys about teaching finance in the Darden core curriculum, and we also talk with Ian about his fintech elective, including a discussion about Bitcoin, cryptocurrency, and more. I think you're really going to enjoy this conversation. As always, if this conversation is helpful for you, please like this episode and subscribe to this podcast so you never miss an update. And remember, you can always check the episode description for links to Darden blogs, social channels, and more. And now, without further ado, here's my conversation with Ian Appel. Well, Ian, thank you so much for being here.
Brett, thank you so much for having me. I'm really excited to tell everyone about myself, talk a bit about Darden and why I think it's a special place.
All right. Well, thank you so much, Ian. We always start with the same first question. So tell us a little bit more about you. Who are you and what's your background?
So I'm from close by. I grew up right outside of Baltimore in Maryland. And I studied math as an undergraduate. And I was one of those sort of undergrads that changed majors like 5 times. At first, I wanted to be a medical doctor. And then I was like, no, I really enjoy physics. And eventually I settled on math. Now, towards the end of my undergraduate studies, and I was, always interested in sort of applied math, I didn't really discover finance until the tail end of my undergraduate studies. And so that's how I sort of started to get really interested in both finance, economics more broadly. And so after undergrad, initially I was planning on going straight to grad school, but I caught this finance bug and ended up interning with a hedge fund. And it was initially going to be just for the summer. I was going to start a master's degree after that. And then they offered me the opportunity to stick around, and it was too good to pass up. I said, absolutely, I'll take it. I really enjoyed working at this fund. And that was I graduated college in 2007. So then 2008 happens. That's the financial crisis. The fund I was at did not end up doing particularly well, as was true for many financial institutions at the time. So after that, I decided, hey, now's the time to go to grad school. That was sort of the trend at the time. Whenever there's, a big recession, financial crisis, especially the young people working in finance, oftentimes head to grad school. And so I started a PhD at that point. I went to Wharton to study finance, not really knowing what I was getting myself into. Like I said, I sort of had this quantitative background. I was interested in finance, and there was a lot of questions that I had that I wanted to sort of explore more rigorously, where I wasn't necessarily happy with some of the conventional wisdom you hear when you're working at a fund. And so that sort of was my thinking going into this PhD program, not really knowing or having that great of a sense for what I was getting myself into. And I think that's true for a lot of people when they sort of go down this route. They're interested in research, they want to learn more. And so I spent 5 years in Philadelphia. I ended up sort of focusing my research not on sort of the asset management side of things, but more on the corporate finance side of things. And so we'll talk more about sort of the types of stuff that I'm interested in studying, the questions I'm interested in later. But I finished a PhD, and then I took my first job at Boston College and ended up there. I was there for about 5 years. And now I'm in the fortunate position of finding myself at Darden.
Well, thank you, Ian. What brought you to Darden?
So there's a number of things that sort of I found, were a really great fit for me in terms of how the school operates. And so something that I truly appreciate here is sort of this emphasis from a faculty member's perspective of having this blend of both academic rigor as well as interaction with practice. And some people might be surprised. You might say, hey, this is a business school. Of course you do this. Oftentimes it's not the case. Oftentimes, it's almost like the cliche of, you have this researcher in their ivory tower that isn't really interacting as much with the real world. And so something I truly appreciate here, and this is true for all of the faculty members, is there's this huge emphasis on practice and what you're working on, how does it inform practice? And practice can be broadly defined. It might be, how decisions are made within a firm. It might be sort of how regulators should approach a particular issue. But something I truly appreciate about my colleagues is everyone's thinking about these questions. And so that was sort of one factor that really attracted me. Another, which I'm sure we'll spend some time on, is I truly do appreciate sort of the culture around teaching. And so while I was at Boston College, so something that a lot of people might also not realize is that when you're in a PhD program, you are focused on research. The first time I had to teach a class, essentially it was, well, go teach a class. I've never taken a course on, education and sort of how to sort of help students to grasp some of the topics that we're discussing. It was more like just go teach. And what I discovered was I really enjoyed it. What I discovered was that, this chance to sort of introduce students to things that I get excited about is a lot of fun. And so something I also really appreciated about Darden was the emphasis on teaching. We want to be world-class researchers and world-class educators. And so that emphasis was something I truly appreciated as well. And then just finally, the faculty at Darden, my colleagues are truly world class, and they're fascinating people to interact with, and that was certainly a huge draw from my perspective as well.
Well, a lot of that resonates with past conversations we've had here on office hours. One of the things that's really interesting to me about the research that faculty do here at Darden is, to your point, that connection to practical affairs and how that kind of bleeds into the classroom, because you're doing case discussions and all of it is about sort of solving problems and having these discussions about how these things are actually done in the real world and how you might make this kind of decision. It feels like there's a real nexus between these things.
No, absolutely, and so it applies both sort of in the classroom where people can bring in some of the research that they've conducted and talk about how this can apply to a real world business decision that's being made. But then it also goes the other way as well, where, well, we want sort of practice and what's going on in the real world to inform the things we're researching, the things we're thinking about. And so having that go both ways, I find to be really beneficial. I think it makes you a better researcher, and I think it makes you a better teacher.
So we always ask faculty on this conversation series about teaching through the case method. So it's interesting to hear about your journey with teaching, that you never took a class in teaching. It was like, go teach a course. Teaching through the case method is challenging, as we've heard from faculty here on office hours. It's much easier to give a lecture. You're in control. You know exactly what you're going to talk about. Maybe you can give the same lecture over and over again. Case method, it has a lot more spice to it. What do you enjoy about teaching through the case method?
I think it's almost exactly that, which is the lack of predictability in some regards, where a case truly is a discussion, where oftentimes when you're doing a case in a classroom, there isn't necessarily an obvious answer. There isn't necessarily a right answer. You're really truly trying to tackle a real world problem that someone has faced. And much like in the real world, well, there isn't necessarily a right answer. And so what a case is in its best form is it's just a conversation where you're drawing on other knowledge, things that have been developed previously. but we're trying to arrive at an answer. And some people will have very strong opinions on sort of one particular approach. Others might propose something that's radically different from that. And the point isn't necessarily to sort of arrive and say, hey, the answer is 7. It really is one of those things where what the instructive part of the process is sort of how we get there and that conversation that ensues. And so that's what makes a case study fantastic. That's why it is truly, I think, a great way to approach learning. Is it's not just me standing at the front of the room with a PowerPoint, showing formulas to people. And sure, when you take a finance class, well, we need to use some formulas. There's going to be quantitative aspects to this, but you can learn that anywhere. Anyone can sort of figure out how to apply a CAPM formula or something like that. The really challenging part is how we use this to inform a real world decision. And that's what case studies are really excel in terms of helping students to think about these issues, because ultimately that's what you're going to face in the real world.
So you teach a core class, you teach FMP2 or Financial Management and Policies, the second part of that course in the full-time MBA program. You also have taught an elective about fintech, and I think our ExecMBA students have even had an opportunity to take that class. And so I want to talk about FMP2, this finance class that you teach in the core curriculum. What do you enjoy about that course? What is that course all about? How do you see it fitting into the core at Darden?
I think the fantastic thing about FMP2, and so there's 2 core finance classes, Financial Management Policies 1. That's for 1 quarter. I come in the next quarter and teach FMP2. And these 2 classes, they're sort of jointly designed, and they're dealing with sort of fundamental questions in finance, mostly focusing on corporate finance, how a corporation, how a firm makes decisions. And so really fundamental decisions in terms of, what sorts of projects do we want to do? How should we finance those projects? Things of this nature. And these are sort of fundamental questions in finance. And so they're sort of both very important from a practical perspective, as well as more of an academic perspective as well. And so in essentially any sort of, and it's not the key, I think, point about these courses is they're not just intended for people that want to go work in finance. Of course, these are things you want to know if you want to get into investment banking or investment management. Well, these are sort of core fundamental ideas you need to understand, but they're equally important for sort of a general management career as well, where ultimately, if you're a decision maker at a firm, you need to be comfortable with sort of this financial toolkit in order to inform how you're making decisions. Do we want to invest in this particular project to, open a new plant or something like that? Well, ultimately, the financials need to inform a decision like that. Do we want to pursue this new marketing strategy? Well, again, the financials need to inform that. And so really for all areas of business, we're sort of teaching some of the core skills that are needed in order to inform how decisions can be made. And so that's what I think is really fun about this class is, well, this is important for everyone that's there. And we can think about a broad array of decisions that are made within a firm where you're going to need to be able to use these skills.
And for folks who are just learning about our MBA programs, at Darden, we're a general management program, meaning the focus is really to Ian's point on helping students grow as managers, as leaders. Everybody takes a core curriculum followed by electives. That's the basic structure of all of our MBA programs. And Ian, that kind of brings us to our next course to talk about is your FinTech elective. Tell us a little bit more about this class.
Yeah, so in some respects, I like to think that I teach on 2 polar opposites of broadly speaking, the finance field. And so we just talked about this financial management policies, these core classes where you're really tackling these fundamental questions in finance. And these are questions that, well, if you would have done an MBA 50 years ago, it would have been important to think about these questions as well. Now, of course, we've learned a lot in finance, generally speaking, in the last 50 years, but still these same fundamental questions. Now, in terms of the elective, in terms of fintech, we're thinking about the future of finance. We're thinking about how new technologies are shaping finance. And this can be both things like personal finance. It can be things like transactions. So everyone, we're not using cash for most transactions now, thinking about how payments are made and things like that. And it can be talking about how different types of firms operate and how financial technology, how things like AI, how things like blockchain are changing the financial landscape. And so this is something where we've seen sort of radical changes in the last 10, 20 years. And even looking forward, when you talk about these types of technologies, likely to continue having a sizable impact, really changing the financial landscape. And so in fintech, we're thinking about the future. We're thinking about, well, how are these technologies going to reshape the financial landscape?
What is it about fintech that's interesting to you? Obviously, it's a real buzzy term. It's out there all the time these days. All kinds of technologies emerging. You hear about cryptocurrency, et cetera. But what is it about fintech that's particularly interesting to you?
I think one of the things I find most interesting from a very sort of basic perspective is that there's a number of aspects of finance that aren't terribly efficient, things that can be made better. And so an interesting analogy, people used to say, it wasn't that long ago where the fastest way to transfer money between New York and London was to get on a plane and take it over. And so you have these frictions, what we call frictions, that exist in the financial system. And it's interesting to think about and to see, well, how can new technologies help to mitigate some of these frictions, help to make financial transactions better? And when you think about the role that finance plays in everyone's lives, I like to think about it, from a real basic perspective. When I think about what is the point of finance, why do we study this? Why should anyone care about this? Is it just to make money? And no, I think the fundamental idea behind finance is, well, how do we connect borrowers with savers? How do we efficiently allocate capital? And that's something that we want to do in an economy. It makes it so that we can have businesses that grow, that hire people, that create new products, that have innovations. And so ultimately, if there's a way we can make that better, well, that has potentially really important ramifications for sort of a broad swath of society. And so in terms of fintech, well, I think this is really interesting. Well, how can technology help us to do that better? And so that's I think from a a very big picture perspective, why I think it's such a fascinating topic.
Obviously, you talk about a lot of different things in your fintech elective, but just to help folks maybe grasp a little bit more about what you get into in this course, is there a case that you engage with as you read in this class that you think would be fairly reflective of the kinds of conversations you have in the elective?
So yeah, we really do cover a lot in not a lot of time in this class. And so in terms of how it's organized, we think about some of the basic functions of the financial system. And so we think about things like banking, we think about insurance, we think about investments, and we look at sort of particular case studies, thinking about, well, how can technology be applied in these particular arenas? What are those frictions that technology can help us to mitigate? And ultimately, we think about, well, is this successful? Is this something that really is going to help in terms of, the core functions of the financial system. Part of in terms of the units in the course, we spent some time talking about cryptocurrencies as well. And so I've written a couple of case studies on this. And so I think one of the student favorites is a case study on Bitcoin, in terms of, and I think it's a fantastic sort of topic to cover in a case study, because people go into it oftentimes having strong opinions one way or the other. Some people go in and say, Bitcoin is great. We should buy it. We should have it in our portfolios. Other people say, I don't understand the point of this. Other people, and then, typically you have a sizable portion of the class as well, which is somewhat agnostic on it. Doesn't really have a strong opinion one way or another. But this makes for something where you can have a really active conversation where everyone at this point is familiar with Bitcoin. But when you have sort of these opposing viewpoints, that makes for a really active discussion and a fantastic opportunity in the class for students to learn from each other. And that really is sort of, when we're in a classroom, when we're doing a case study, that is the point. That's what we want. You're not there to learn from me. You're there to learn from each other. And so when you have people with experience interacting, that's where I think you have the most productive discussions in a case study atmosphere.
So let's talk a little bit more about that case about Bitcoin. What's the sort of setup for the case, and where does the discussion go?
So it starts out from a very basic perspective. If we think about, ultimately, the case is centered around, do we want to invest in Bitcoin? And first, we need to start out by thinking, well, what exactly is a Bitcoin? And so there's the case builds up some infrastructure in terms of background knowledge, thinking about, well, Bitcoin is a blockchain. And so we talk about sort of what is a blockchain, all this infrastructure. At the end of the day, though, when it comes down to what is the basic economic function of Bitcoin, what does it mean if you own a Bitcoin? Well, it essentially means that you own an entry on a digital ledger. There's an entry on a ledger that says that Brett owns 1 Bitcoin. And so if you own a Bitcoin, that's what you have. And so just from starting out and thinking about this, especially in light of sort of topics that we cover in intro finance classes, this doesn't make very much sense in a classical sort of financial framework, where what we talk about in intro finance classes, what everything centers around in terms of how we make decisions, is we think about the cash flows generated by an asset. And so if we go out and we buy a bond, and we're trying to figure out, well, should we buy this bond? We look at the cash flows generated by the bond. If we're a manager and we're trying to decide whether or not to take on some new project, well, we look at what are the expected cash flows that are going to be generated by those projects. Now, if we own a Bitcoin, well, there are no cash flows. And so using that framework that's been developed in previous courses, we would naturally conclude that the value of Bitcoin is 0. If it has 0 cash flows, that it has 0 value. Well, it's hard to square that with reality now, isn't it? Bitcoin, sure, say 10, 12, 15 years ago, traded at a very low value. Today, we see that a Bitcoin's at, give or take, $70,000. The total market capitalization is over $1 trillion. And so we need to ask ourselves, well, what is going on here? Why does Bitcoin have value if it has 0 cash flows? And so I think some people are immediately dismissive. And you see this in the financial press all the time. Someone will come out and just say, oh, Bitcoin's a bubble. Maybe. But we want to think about, well, maybe it's not a bubble. Maybe there's a reason why Bitcoin has this value. Maybe there's a comparable sort of security or financial asset that can help us to think about Bitcoin. And so that's what we discuss in the case. And so one of the key ideas in the case when we're thinking about why does Bitcoin have value, which is sort of the first question we need to address if we're trying to decide whether or not we actually want to invest in it, is a lot of the time people compare Bitcoin to gold. You might have heard this phrase, digital gold, before. And it's an interesting comparison. And so if you think about gold as an asset, lots of people invest in gold. Well, what is special about gold? Well, there's a number of features of gold that people like, where it's in finite supply. Gold's relatively divisible. And so if you have an ounce of gold, well, you can split that up into 2 half ounces. But most importantly, everyone agrees that gold is valuable. And so people, for literally thousands of years, people have agreed that gold has value. Now, part of this value comes from actual use cases. You can use gold for stuff. You can use gold to make jewelry. Gold has lots of applications in electronics, things like that. But also people hold gold for other reasons, not because they want to make jewelry or use it to produce different types of electronics. People buy gold as a store of value because everyone agrees that gold is valuable today, and people believe that everyone will agree in the future that gold has value. And so why do people call Bitcoin digital gold? Well, in some respects, it has similar properties, and in some it doesn't. And so much like how, well, gold is in finite supply, Bitcoin is also finite. There can only ever be 21 million Bitcoin that are ever what we call mined or produced. Likewise, Bitcoin is divisible. You can chop up a single Bitcoin into a number of smaller units as well. And so what's sort of, now, one of the key differences, unlike gold, is that Bitcoin doesn't have really any use cases or has minimal use cases. Where gold, sure, we can use it to make electronics. It should have positive value because of that. In many respects, the fundamental value of a Bitcoin is zero. And so what's interesting to think about in the case is, well, this feature of gold, which is people agree that it's valuable, can Bitcoin achieve that same thing? And when you look at sort of adoption rates and the increasing price of Bitcoin, well, it suggests that more people see it this way, where more people agree that Bitcoin is valuable, just like more people, virtually everyone agrees that gold is valuable. And so naturally, Bitcoin is much more volatile. It doesn't have sort of this millennia of history of being seen as a store of value. But ultimately, that's the question of, can Bitcoin sort of achieve that level? And so I think this is a useful framework for thinking about, well, how are people thinking about Bitcoin? How can we think about Bitcoin relative to other assets that people own? Now, that's only sort of the first part of the case is, okay, well, we need to think about what is the, in some respects, economic function of Bitcoin. The next sort of challenge that students need to grapple in this discussion is, should we buy it? And this is a much trickier question in a number of respects. Well, it depends on a number of factors, your risk tolerance. And also, what we want to know, what is the value of Bitcoin? We can sort of, based on that previous discussion of digital gold, maybe we can wrap our heads around, well, Bitcoin should have a value that's greater than zero. But it's an entirely different and arguably much more challenging question of, well, what do we think it's worth? And so here's where this is, as an investment manager, this is sort of the key decision. You want to buy assets that are undervalued. And so do we think, for instance, that Bitcoin trading at $70,000 is undervalued or overvalued? And this is a much trickier question that's that students need to sort of grapple with and think about, well, how should we decide if right now is the time to pull the trigger or not?
Yeah, that's super interesting because you can't go look at a balance sheet. You can't look at a reporting, like a report that says, "Oh, this is how it's performed." I mean, you can see how it's performed over time, I suppose, but it doesn't say anything about where it might go in the future.
Yeah, we have no, I mean, the fundamental idea behind valuing an asset is we look at the cash flows. Well, if you have no cash flows, how do we value the asset? I mean, ultimately, it comes down to, well, supply and demand. One approach that some people like to use, and there's, some drawbacks to it, is thinking about, well, what should the value of Bitcoin be relative to the value of gold? Now, we're sort of transforming that question into another question that's difficult to answer. Some people would say, well, I think that Bitcoin should be as the market cap of Bitcoin should be equal to the market cap of gold. Some people might say, I think the market cap for Bitcoin should be 50% or 20% of the market cap of gold. Some people say that I think Bitcoin should be more valuable than gold. And so gold, in some respects, can give us a benchmark. But again, we have this very challenging question of, well, if I'm comparing, Bitcoin to the value of gold, should Bitcoin be worth 10% of gold's market cap, 20%, 50%, 200%? Well, we need to figure out the answer to that as well.
It's interesting hearing your sort of discussion about how to think about Bitcoin's value and that has no functional value, which is sort of the broader question with cryptocurrency generally. Why does cryptocurrency exist? Why is this necessary for the economy when we think about these technologies?
Well, so and I think this is a great point. And so in when we're doing this unit on crypto, the first case we talk about Bitcoin. So Bitcoin is, in terms of market capitalization, is the largest cryptocurrency. But like we said, it, for all practical purposes, doesn't really do much. It seeks to be this sort of store of value economic function. In the second case, we talk about what's called decentralized finance. And so decentralized finance is largely based on, it uses the second largest cryptocurrency, which is called Ether, on the Ethereum blockchain. And the point of decentralized finance, or DeFi, is how can we use blockchain to provide different types of financial services? And so, without getting into the details too much of how this operates now, what's different between the Bitcoin blockchain and the Ethereum blockchain is the Ethereum blockchain allows you to create these computer programs called smart contracts. And so smart contracts are essentially these self-executing computer programs. And you can use these smart contracts to provide different types of decentralized financial services. And so what's an example? Well, think about trading a cryptocurrency. Typically, people use a financial intermediary. If I want to take dollars from my bank account and use that to buy Ether on the Ethereum blockchain, okay, well, I can wire money into Coinbase or Binance or whatever centralized crypto exchange I want to use. And from there, I can go and buy this digital asset. What decentralized finance tries to do is to remove that intermediary from the transaction. In some respects, you can think about it as trying to make this financial transaction comparable to a peer-to-peer transaction. And so there's a number of different what we call protocols that try to provide these basic financial services. They could be trading assets, it could be borrowing and lending, it could be payments, but provide these basic functions, but remove the intermediary from the transaction. And in fact, this is a broader theme when you think about fintech more generally, which is you have these different platforms that want to disintermediate financial services, remove these traditional intermediaries like banks or exchanges or insurance companies, but still allow people to use financial services. There's a famous quote that's oftentimes attributed to Bill Gates. I don't know if he actually said it or not, but it's a it's a convenient story if so, where he famously said, "We need banking, we don't need banks." And so ultimately, DeFi is one approach to using this. And so you might ask yourself, well, why? Why do banks provide all these valuable services, insurance companies, exchanges? They're really useful. The basic idea here, and this goes back to sort of what we talked about at the very beginning, which is, well, there's these frictions in the financial system. And so a more formal way of saying that is that, well, some of these intermediaries might accrue rents. They make lots of money. Well, maybe we can make financial transactions cheaper. Maybe we can improve them in some other way, maybe make them faster by removing intermediaries from the actual transaction. And so this application of blockchain technology, well, it tries to remove the intermediaries, reduce those frictions, and ultimately seeks to make financial transactions better. Now, the key question, and this is something that we grapple with in class, and it is sort of fundamental here, is, well, what is the potential for decentralized finance? Can it actually achieve the goals that it has? Because right now, frankly, it's not very useful for much. You can live your life quite happily and never interact with one of these DeFi protocols. And so we think about, well, what is the potential of this technology to disrupt traditional financial services? And right now, that's very much an open question.
I appreciate all that. It's an interesting thing to consider. It's sort of why do we need this? Where can this go? It feels like that's maybe a lot of the conversations you would get into with the FinTech Elective. This is interesting note here in the Q&A of someone who noted that Bitcoin could potentially be used as a collateral asset, in a business deal, and noted that they had a mortgage transaction where it was used as a collateral asset given its value that's out there. So that interesting point there. Ian, I'm wondering though, how do you keep a FinTech Elective current? Like, it feels like this stuff is constantly changing. There's always stuff in the news, new technologies coming along. How do you keep the class current?
So I would say that it's a combination of things. And so one is, this is something I spend a lot of time on these days, is, well, writing new cases, talking about what's happening in the world. I bring in several guest speakers into the class. And so here, typically the way these classes are organized is I'll lead a discussion. We'll talk about a case study, say, for the first hour, maybe a little bit less. And then in the final half hour, we had a guest speaker come in. And so last year we had guest speakers from Meta. We had a guest speaker from Coinbase. And they sort of lead a discussion. And so typically they'll talk about sort of the things that they're working on right now, what they think is important. And it also provides a great opportunity for Q&A between the guest speaker and the students. Typically with a lot of these speakers, they tend to be alums. They're going to stick around. They take a very active interest in the students. And so there's opportunities to interact with them more outside of the classroom as well. And so I think that's sort of one important thing in terms of really helping to bring everyone along to the cutting edge of what's happening today in organizations related to fintech. And so that's one important thing. Another important sort of aspect of the class in fintech more generally, I think, is that there are a number of aspects which to some degree are timeless, where we can think about the disruption of financial services, and it's useful to look at previous examples of not just what's going on today, what's the latest attempt to disrupt financial services, but think about previous attempts as well. because ultimately lessons learned from those previous episodes can help us to inform things that are happening in the world today. And so really the class is to develop a general framework for how we can think about the use of different financial technologies, um, and how we can apply them to a wide variety of situations. I mean, at the end of the day, it's impossible, given the time we have, to do a comprehensive overview of sort of the developments happening in all these different fields across different countries. You have very different sort of fintech environments. What's going on in China is very different from what's going on in Africa, which is different from South America, which is different from the US. We can't give a comprehensive overview of what's happening everywhere, but that's also not the goal. The goal is to develop this sort of general framework for how we can think about things more generally, and use that, and students can take that and apply that to a wide variety of situations.
Question here from the Q&A wondering about, I figured if we talked about fintech, we'd get some questions about it. And this person wants to know, you talk about stable coins or central bank digital coins as
Sure.
part of the class?
So we talk about, so stable coins are very important, particularly when we're talking about applications in DeFi. And so we talk about both. There's different flavors of these stable coins. And just a little background, what a stable coin is it's a cryptocurrency that seeks to maintain a peg. And so typically they're pegged to the US dollar, but you could also peg them to the euro or the yen or to another type of commodity like gold. And so what you're trying to do with a stable coin is you're trying to have the benefits of cryptocurrencies, things like low transaction fees, but the benefits of low volatility. And so we talk about them in DeFi, and you have different flavors of stable coins. And so you have both centralized ones, where you have a company like Circle or Tether, the two largest, where they produce these stable coins. And so again, you could think about this as a financial transaction where you're using an intermediary. But then you also have decentralized stablecoins, which are asking, well, how can we use these smart contracts to create a stable coin without relying on one of these centralized intermediaries? And so some of these decentralized stablecoins seem to work reasonably well. There's one called DAI, D-A-I. And then there's also ones, for instance, most famously, the UST, the Terra stablecoin, which were dramatic failures. And so this is a very interesting application of DeFi and potentially very important. Looming over all of this is the idea of, well, what if the government created a stablecoin? What if we had a digital dollar? And so this is something which is subject to a lot of discussion right now. In many countries, you see a lot of effort being dedicated to creating these central bank digital currencies. In the US, there seems to be sort of contingencies that are uncomfortable with many aspects of having a digital dollar produced by the government. And so going forward, this is something that's going to be very interesting to watch, because at the end of the day, it's possible that we're just going to have a digital dollar produced by the government, essentially a government stablecoin.
Well, I know one of the things that we talked about in our prep call was the recent ETFs that have been launched around Bitcoin and cryptocurrency. Do you want to talk a little bit more about that development and why that's interesting and the questions that it implicates?
Yeah, so what we've seen recently are the production or the approval of ETFs. And so right now you can, there's a Bitcoin ETF and an Ether ETF has been approved as well. And so what is an ETF? Well, an ETF is a financial vehicle that allows you to invest in different types of assets, but they trade on a stock exchange. And so some of the biggest ETFs, for instance, track a stock index. So SPY is an ETF you can buy. You type in the ticker SPY, and through a brokerage account, say Robinhood or Vanguard or whatever, and you can go and buy this index fund by buying an ETF. Well, what's also happened now is we have a Bitcoin ETF. And so before, to buy Bitcoin, you had to create an account with Coinbase, or you could buy it through Robinhood or entities like that. Now you can just go through your normal brokerage account and buy a Bitcoin ETF. And soon you'll be able to buy an ETH ETF as well. And so this is sort of interesting. Going into this, it wasn't clear to me what to expect. Are there a lot of people out there in the US who want to own Bitcoin but can't? And what we've seen is, well, there's actually been tremendous flows into these products. You've had a lot of people, it would appear, that wanted to buy Bitcoin, wanted to buy crypto, but didn't want to have a brokerage account with Coinbase, say. Instead, they want to have these custody products. So there's ETFs produced by some of the largest investment managers in finance, like BlackRock and Fidelity. And they wanted to be able to buy a cryptocurrency through them. And so we've actually seen dramatic flows, much higher than almost anyone expected, into the Bitcoin ETFs. And so it's sort of interesting to see how this is going to evolve in the future. It appears that a lot of these flows are probably coming from RIAs, people that are managing retirement accounts for people. We've also seen a lot of flows from traditional financial institutions as well. There's hedge funds that have bought a lot of the Bitcoin ETF, suggesting that, well, they wanted exposure to this asset class, but only through the ETF vehicle. And so recently, within the last few weeks, we had the approval of another ETF for Ether. And this one was for some particularly surprising, or more surprising. And the reason for that comes down to regulation, which is sort of one of the key issues in the world of blockchain and digital assets today, where from a regulatory perspective, there seemed to be some consensus that Bitcoin is a commodity. And so we think about Bitcoin from a regulatory perspective, like we think about things like gold or other types of commodities. With Ether, there was bigger questions, where there was this sort of debate going on of, well, should we think about ETH as a commodity, or should we think about ETH as a security? And this is a very important distinction, because it matters for, well, who regulates you? Because commodities are regulated by the Commodity Futures Trading Commission, the CFTC. Securities are regulated by the Securities and Exchange Commission, the SEC. But it also matters for how you're regulated. What do you need to do? Do you need to make certain types of disclosures? And so there was this debate about ETH. Is it a commodity? Is it a security? And so with the approval of the ETH ETF, well, it seems that implicitly what's been decided is that ETH is a commodity as well. It's not a security. And so this provides some degree of regulatory clarity when it comes to these digital assets. There's still really big questions here. And you see this really across the world, where regulators are trying to grapple with these questions of, how do we regulate cryptocurrencies? And so Europe, they have something called MiCA, which has made some progress on this. In the US, there really hasn't been as much progress, but it does seem like something, particularly in the last couple of weeks, that you're starting to see some movement, or more movement, with Congress taking this issue more seriously.
Well, Ian, we've got about 10 minutes here. I want to make sure we have a little bit of airtime for one of your primary research interests, which is your interest in governance. What attracted you to governance in particular? What's exciting to you about this topic?
Yeah, so I tend to my overall sort of research agenda broadly speaks to this idea of governance. Now, within governance, sort of broadly defined, I've researched sort of a broad array of different topics. And so, what I think is interesting about governance is when you think about a corporation or any type of firm, people use this phrase when they talk about Wikipedia. They say, well, Wikipedia works in practice, but it doesn't work in theory. And it's sort of tongue in cheek, but if you think about it, if someone pitched the idea of Wikipedia to you, and they said, oh, we're going to have an online encyclopedia that's going to overall be quite accurate in most situations, but we're going to let anyone edit it. We're not going to have like a team of editors and writers that we're paying. Anyone can do it. They sign up for an account, they make changes. It sounds kind of crazy. Well, when you think about how a corporation is designed, and corporations, from this broad perspective, what they're doing is they're trying to organize human behavior to undertake some sort of economic activity. And so we raise capital from all these people, all these shareholders. We have an entrepreneur or CEO that says, I got a great idea. They go out and they raise money. And then the CEO, they go and they try to execute that vision. They undertake projects, they make investments, they hire people. Well, when you think about the basic structure of this, well, those people that the firm raised money from, the shareholders, well, how do they make sure that the firm, that the CEO is doing a good job? How do we make sure that, we don't have a conflict of interest, say? Well, part of this is going to be, there's laws. CEOs, you can't steal. Sure. But there's lots of things that a CEO can do, that a manager can do, that aren't illegal, but they might be bad business decisions. It might be something that me as a shareholder, I don't want that manager to do. And so then we come to this idea of, okay, well, what can you do as a shareholder? And shareholders do have some rights. For instance, shareholders, you can vote your shares, and we have director elections. If you're unhappy with what the directors are doing or what the CEO is doing, who's hired by the directors, you can say, okay, we're going to go in and we're going to replace those directors. Now, ultimately, this is something that's very hard to do. And at times, firms will take specific actions to make this even harder for shareholders to do. And so, for instance, you can do what's called staggering your board, where you don't have the whole board up for election every year. You have, say, a third up for election this year, a third next year, a third the following. And so why this makes it harder now for shareholders is, well, if you want to take control of the board, if you think the directors that are there are doing a bad job, well, you don't need to just win one election, you need to win two. And so this is sort of when I think about it, and going back to that Wikipedia example, we have a situation where, at a very fundamental level, in some respects, you're scratching your head and saying, well, why does this work? The shareholders are going to give all this money to the manager, and then the manager has lots of latitude to do whatever they want. They're protected by something called the business judgment rule, as long as they're not breaking the law. But here's the crazy thing. It works really well. When you think about corporations in the US and what they've done in terms of promoting innovation, promoting economic growth, I think most people would agree that this has been wildly successful. Now, of course, the system's not perfect. There's costs. But overall, well, corporations are quite good, I would argue, at doing what they set out to do. And so ultimately, this is where governance comes in. This is why governance is important. And we think about, sort of broadly speaking, the mechanisms that help to align the interests of the CEO with the shareholders. And so these could be things like incentive compensation. This has been in the news lately with Tesla and Elon Musk. These could be things like trying to influence managers behind the scenes. Or this could be very public things like activist hedge funds. who will say, hey, if we think the CEO is doing a bad job, well, we're going to go in and try to take control of the board, try to get someone else in there.
Ian, I'm curious about how your interest in governance connects with your interest in fintech. How do you see these two things? What's the connection there?
Yeah, and this is something that I've been working on quite a bit recently, which is specifically thinking about governance and the intersection between governance and blockchain technology. And so specifically, me and a co-author of mine, Jillian Grennan, have been looking at this new organizational type called a DAO, DAO, which stands for a decentralized autonomous organization. And so what these things are is they're this new organizational form that's been created in this sort of blockchain or crypto world to bring governance to some of these protocols, these DeFi protocols that we talked about before. Because at the end of the day, you have smart contracts, you have these sort of self-executing agreements that can take care of the transactions. But ultimately, someone needs to be making certain types of decisions. For instance, if we have a lending protocol, well, what type of collateral do we want to have in this protocol? What are we going to accept as collateral? How much collateral do people need to post? Ultimately, there are decisions that need to be made. And so you have these new organizations. And what's interesting about a DAO relative to a traditional firm or a traditional corporation is that they're decentralized, meaning you don't have a centralized leadership decision maker. You don't have a CEO. Typically, there is not a board of directors. Sometimes there's something similar to a board of directors, but not as formal. And so the broad question we're thinking about with this research is, well, can these organizations work? Can they actually provide the governance necessary for sort of some of these DeFi projects to really succeed? And it's very exciting right now because as a new area, there's tons of experimentation going on. No one really knows what the answer is here. And so I think this is sort of an interesting application of how do we think about governance when it comes to this new type of financial technology?
Well, Ian, we're at the end of our time. I do want to ask a question just for folks who've gotten interested in this conversation. I think people have been very, based upon some of the questions and notes that we've gotten in the Q&A, people really enjoyed hearing your perspective on fintech and all these hot topics in finance. If people have become interested in this conversation and they want to learn a little bit more, are there any books or 3 books you might recommend for folks who might want to dive a little deeper in today's topic?
Absolutely. And so for the fintech side of things, so my number one recommendation is not exactly a book. It's about as long as a book. But Matt Levine, who's one of my favorite writers, he writes for Bloomberg, a year or two ago wrote an entire issue of Bloomberg magazine called "The Only Crypto Story You Need." And so in terms of starting to think about crypto, or I learned quite a bit just from reading it, is he takes a very sort of agnostic approach towards things. Because a lot of the things you come across, people have an agenda one way or the other. He takes this very sort of neutral look at things of, well, what are blockchain technology? What could it be useful for? What are the problems that it faces? On top of that, he's a fantastic writer. And so that tends to be sort of one of my main recommendations in terms of starting to think about some of these things a bit more. Another a book that's currently on my nightstand, in fact, I have it right here. It's called The Everything Token. It's by Steve Kaczynski and Scott Du Commoners. And so Kaczynski, he's a partner at A16Z, which is one of the main VCs in the crypto space. Scott Commoners is a professor at HBS. And they're thinking about NFTs in this book. And I think it's something that I'm learning more about now. NFTs are one of those things where people are sort of immediately dismissive because everyone remembers like pictures of monkeys being sold for $100,000 a couple of years ago. But what they lay out in this book is sort of how businesses can use this technology And I think they raise a number of very interesting points in there. And then my final recommendation, this we'll go back towards the governance side of things here. One of my favorite finance books, I think, is called Barbarians at the Gate. And so this is a book that was written in the late 80s, talking about Henry Kravis and the hostile takeover of RJR Nabisco. And so it really sort of gets into the trenches over one of these battles for corporate control, with a lot of, bringing up a number of topics that continue to be very relevant today. And so that's sort of one of my favorites as well.
Yeah, that last one is a classic.
It's a classic.
I've been on, gosh, it's one of those books. I think if you do a search of like business school related books, might probably comes up even to this day. So, well, Ian, thank you so much for your time. It's been great. I've enjoyed the discussion. To all our attendees, thank you so much for joining us. We'll have these office hours conversations throughout the summer months. We have one in July coming up, July 12th, with Michael Ho, another member of the finance faculty here at Darden, who teaches in the full-time program. He teaches in the part-time program and executive MBA program. So encourage you to join us for these conversations. As always, we've recorded this conversation. We'll put it out on our Vimeo channel. We'll also share the audio on our podcast. So look for it there. But thank you again, Ian, for your time, and I hope everybody has a wonderful weekend. Look forward to seeing you again soon.
Thank you.
And that was my conversation with Ian Appel, faculty member in the finance area here at the Darden School of Business. As always, if you have any comments, suggestions, requests, anything you'd like for us to cover here on the podcast, we're all ears. We can be reached at Darden, that's DARDEN, @virginia.edu. Until next time, stay safe, be well, and thanks for listening.